on the economy, so we're going to start out, put you on the spot a little bit with our first question. So in 2014, do you think the Iowa economy will A, improve dramatically, B, improve slightly, C, remain the same, D, regress slightly, or E, regress dramatically? And we'll start all the way down the end with Debi.
Oh boy.
Surprise you.
Thank you very much. I'd like to talk about the canonization of Terry Lillis. There's no reason to wait, really, is there? You know, if I had to, we did get an idea that we were going to be asked that question, and I think if I had to choose, I would be somewhere between growing moderately to growing significantly. 2013, I think, was a real transition year, both nationally and to some extent for Iowa, although I think Iowa's been ahead in terms of recovery compared to the nation. But we have been through a period, I think, unlike what most of us have ever seen before. We've certainly been quite dependent immediately following the financial crisis, and it is hard to believe that the recession was officially over as long ago as the data suggests. We've been in a period where we've been very dependent on government stimulus in order to jumpstart the economy. Some would say we've relied on that more than we should have. I think others have certainly made the case that we should do more. But in many cases, it's been a very real lift to our economy. But that's not sustainable. And I think 2013, and certainly the last half of 2013, have seen a period where the economy has begun to recover and grow. Personal consumption has increased, business investment has increased. I'll be interested to hear Franklin's take on housing, because that has improved, but still is not strong. But I think all of that sets us up for a strong, real economy in 2014.
Well, thank you. I guess I would agree with David. I think slightly or moderate. Let me tell you why I say that. You know, obviously we follow a lot of indicators at the authority. We're certainly looking at our GDP growth. We're looking at, of course, the state fiscal health for the state, and I like that Mary talked about that. We pay attention to retail sales, showing consumer confidence. We look at housing starts. We're looking at per capita income growth, because when Governor Branstad came in with the bold agenda of growing 200,000 private sector jobs, you know, what always gets lost in that, every time we have a discussion of, you know, where are you on the job count, they lose really what I think is the most significant goal, which is raising family incomes by 25%, which is a wealth-creating agenda. So everything we've done at the authority since we started, from changing the delivery system to writing the organization with, you know, the good to great theory, surround yourself by great people, to really streamlining our incentives and doing a return on investment model on everything we do is about building wealth. So I am very optimistic for what I see. Our portfolio is about $7.5 billion. I hope to close $1 billion of business last month. I think it's coming in February as soon as we finish the negotiations. But let me tell you, I'm going to give you some high-level market intel, and then I'm going to tell you the but-fors that cause me to lose sleep at night. One is we do this thing called synchronous, which we actually go out because 80% of our portfolio and our growth comes from within. It comes from existing companies expanding. It's economic development 101. Take care of your own backyard first. And then when we are recruiting businesses, we recruit through a supply chain. So what we're hearing from these CEOs in these traded industry sectors, which are primarily manufacturing, bio, insurance, finance, IT, software development, is out of this, 600 plus companies say they have the ability to invest, because they're still sitting on a ton of cash, to invest $9.3 billion in capital investment with these 600 Iowa companies and hire 7,000 people in the next 3 to 5 years. So what stops that? The but-fors are this. It comes down to workforce. It comes down to capacity and quality of the workforce. It comes back to infrastructure constraints of where they are to expand. And it really comes down to overreaching federal policies. Because when the federal government allows EPA to change the RFS, regardless of how you feel about that, it creates havoc in a platform that's developing around research and development. So those are the things that, again, causes me to lose sleep. But in the midst of that, I'm still very optimistic. Just minor things.
Good afternoon. Thanks for the opportunity to speak to the group here. I look at the Iowa and the Midwest as having a real advantage over other parts of the country. We have a very diverse economy here, especially in the state of Iowa, with farming and agriculture, manufacturing. Other parts of the Midwest nearby have a lot of energy development going on. We have much lower unemployment than other parts of the country, and as we heard earlier, a very bright financial and budgetary picture, especially at the state level. So when you put all these together, the advantages in this part of the country are very pronounced and very clear, and it has led to better growth in the last few years, lower unemployment than we see in other parts of the country, and I would certainly expect that to continue and that foundation to be built on. So I agree with David that somewhere between slight and dramatic, depending on maybe this day and age, 3% growth is viewed as dramatic, I'm not sure. But I'm very optimistic about the economy here in Iowa. And when I look more nationally, it's very regional as to what's happening, especially related to the housing sector, which is the sector that I see the most about. There are a lot of parts of the country where there's pent-up demand, there's lack of inventory. Home prices, which went down very, very far in the last 4, 5, 6 years, are rebounding very quickly. And in a way, in the housing market, success breeds success. When people see that things are moving up, they start to get more energized. And demographics do work in our favor quite a bit. Every day, new households are formed, people are married, they get families, they have children, and some of them are still living in their parents' basements. Some of you in the room may have that happening. As they get more confident with their job picture and with the economy and overall, they will start to buy homes, and we're seeing those trends pick up all over the United States. So I believe housing will contribute positively, as it did in 2013 and as well in 2014, to growth in this country. And it has a large ripple effect across a variety of industries, whether it be furniture, home improvement, et cetera. So I'm very optimistic about 2014 here in Iowa.
Okay. I'm going to grade it a little bit lower. That doesn't surprise you. Somewhat optimistic. When I look out at Iowa, I've got two different Iowas. I've got the average Iowa experience. It looks pretty good. We got good numbers. You look across the board, things feel good. Fiscal accounts are good. Incomes are growing. But I've got a lot of difference across my state, this state. The difference between what's going on in metropolitan areas and some of our more rural areas is profound. 60% of our counties are continuing to contract. We have a high rate of migration of young workers, young people, away from those rural regional economies. And so we're ending up with a greater and greater difference between how well we're doing in the metropolitan areas like this one and how well we're not doing in quite a lot of the rest of Iowa. Average it all out, we're growing, we're looking pretty good. Is all of Iowa going to look good next year? No, it's not, and I don't like that. And we can't do anything about it. This is an inevitable long-term process of urbanization, transformation, and change, and we're having to shake it all out. We've been doing it for 25, 30 years, and we're going to continue to do that. The dynamics of development and growth, we've got great assets in the state. We've already mentioned it, we talked about it, the farm economy is incredibly healthy right now. Manufacturing is stable, not growing as much as we want. We've recovered some of the jobs, a good fraction of the jobs, but nowhere near all the jobs that we lost. And so even though jobs have climbed back up, close to where they were, if not where they were before we went into this recession, we've got some sectors that are still suppressed. And so we have a ways to go. We have issues. Productivity gains per worker, just yours and my average output. The rest of the United States is doing better than we are. We're kind of stalled. Well, one of the reasons is because what we make, what we grow, the financial instruments we develop, we sell to them. We need them to be healthy for us to be healthy. There's a relationship there. And so we're kind of caught waiting for the rest of the economy to help pull us along. I disagree with regard to the influence of the federal government and or regulation. I don't think that those things are dramatically altering our economy. This RFS proposal with regard to ethanol would contract production nationwide by 6.6%. Folks, that's not going to have a big impact on jobs in Iowa in the short term. That's not what we need to be worrying about. We really, I think, need to be thinking about how are we going to develop our talent, retain our talent, attract new talent, and be able to maintain a workforce that's productive on into the next decade.
Well, you've already heard from me, probably can anticipate what I'm going to say, but I am cautiously optimistic about Iowa's future, largely because the tone at the top at government, when you have all of your decision makers, or pretty much all of your decision makers, talking about fiscal sustainability, that does impact our business community and therefore our state of Iowa. So I would go with, I think the choice would be slightly improved.